All right, everybody, this is yo, to make up for some of the ones I missed. Fun, this is going, I think this is gonna be a good series. I don't know, I'll let you guys know. I mean, you guys will let me know, I'm sure, like you always do. Anyways, let's just get into this. We've done a lot of things. In the previous video, we went over what happens if you have cash decreasing, all right? Now in this example, we're gonna have it flipped. We're gonna say, what do you do if your cash is increasing in a journal entry? Like what if you have some revenue, right? Like what if you make a sale in your ordinary business? So let's read the journal entry and let's just go over this really fast. Let's do a fast journal entry, and this is gonna be, again, lots and lots and lots of practice. I don't know how many journal entries I've done over my 10-year period as an accountant, but thousands upon thousands upon thousands. So when I read something, when I see something, it's almost second nature because I've done it 1,000 times. All right, it's like when you get up to the plate in baseball and swing, you know, you're not thinking about all the little stuff, you're just doing. So that's kind of what I do when I see a journal entry. Well, let's get this in. CPA Strength was paid $300 for tax return. Do we have cash? Yes, we do. So let's key in on the cash. Let's key in on the cash, ladies and gentlemen. Paid $300. Was paid $300 for tax return. Now, CPA Strength is a tax preparer, and that's like an ordinary. That's like one of his main things he does for his business. So he was paid, and we're thinking as the business. So $300 cash. Now we gotta figure. We know cash is an asset, and if it is increasing in cash, we debit it. If our cash is decreasing, we credit it. We have paid $300 for tax return. We have cash asset increasing. So what do? We know we increase. So we're gonna have $300 over here, $300, cash $300. That's going to be our journal entry, and we know that it's an asset. Let's just check our work real fast. Does that make sense? Does that even make sense? We have, I don't know, does that make sense? We have paid $300 for tax return. So we have cash increasing. We know cash is an asset. If it's increasing, we debit it. Looks good to me. What's the other side? Now we know debits equal credits. Debits mean left. Right, that's all that means. Debits equal left. Credits equal right. And why did I get $300? What did I do to get $300? I performed a tax return, and that's money coming in for an ordinary business venture. Something I do in my everyday business. It's how I run my business. So we know after doing these, that's money coming in for that is a revenue. All right, well, I would first maybe say $300. It's got debits, always got to equal credits, so we'll have $300 over here. Performing a tax return, that would be service revenue. And that's going to be a revenue. Does that make sense? Service revenue of $300 is our credit, it's a revenue. I don't know. If revenues are increasing in value, they're credited. So yeah, that makes sense, and it's just that simple. Anyways, lots and lots of practice, but that's an example of a journal entry going up.